Hello traders and welcome to the London Forex Broadsheets daily video wrap of the markets for Thursday, July 17th. The euro caught a bid during the New York morning session on what looked to be carry trade positioning, then fell in the afternoon as oil took a tumble and stocks continued to rise. With no obvious disparity between the ECB and FOMC, as both are on hold as inflation reaches new highs, commodities and equities look to be the main driver. A bearish pin bar is forming on the daily chart. The technical areas of importance are easy to see on the euro, and once we get these bands in play, either way, they are likely to be very well respected. The euro makes up over 60% of the dollar index, and as such, banking 30-pip moves at a time is the best bet. For each breakout, there is always a willing buyer waiting to step in. The pound reached its highest level against the dollar since March 26th on Tuesday, but with employment now threatened, the Office for National Statistics on Wednesday said claims for jobless benefits climbed for a fifth month, increasing by 15,500 from May. This is the most since the 1992 recession. The pair looks to be headed lower unless a further interest in the carry trade takes hold. The pair is making lower highs on the daily chart and looks to be forming a bearish pin bar at today's close. Still, it is in an upwards trend and holding better than initially thought. The 1.9950 area offers support, and from there the drops could come fast. It was only a week ago that the markets were setting up 2 days of smash and grab on the dollar. Maybe the tables have now turned. The Aussie came within 150 pips of parity on Tuesday, but fell for a second day as investors added to bets the RBA will cut interest rates in the coming months. Australia's currency extended a decline from near the strongest in 25 years as the Reserve Bank of Australia Governor Glenn Stevens signaled yesterday the nation's borrowing costs are high enough to curb inflation. A Credit Suisse index based on interest rate swaps shows investors expect the RBA will cut borrowing costs in the next 12 months. At the start of this week, the probability was for a 2 basis point increase. On the charts, the trend for the Aussie still appears to be to the upside, although a test of the 20-day simple moving average could be in the cards. The MACD histogram is still showing higher highs as the pair falls. The path of least resistance is in following the short Aussie traders as they push things lower right now. Short trades are against the trend, so maybe trade with half the number of lots. The support areas are very clear to see. The loonie fell after a government report showed foreigners increased holdings of the nations for a 6-month in May. The pair seems stuck between the 200-day moving average and parity, which retested Tuesday's move there during today's session and failed. A close above the 200-day moving average today would seem to get the pair up for a test of the 50-day moving average. The pair is still all over the charts technically. The pockets of support and resistance are not going to allow for decent movement in any direction. Take care here or leave it alone. It really is one or the other. The Swissy rose as traders sold U.S. Treasuries and bought stocks today. The pair found resistance at the 100-day moving average, and a close above the 20 sets it up for a move to the 50 and beyond. Especially if Merrill Lynch, who are reporting profits after stocks close in New York today, manages a surprise to the upside. This is the most reactive of the major pairs to the movements of the US dollar, and as such, we are likely to see it get pulled higher if Japanese and European equity markets go up, and by doing so drag Treasury yields higher. Big picture targets are 350 and 500. The yen formed a bullish pin bar towards the close of Wednesday's New York session, which allowed the US dollar yen to challenge and surpass the 50-day moving average at 105.62. This was after JP Morgan Chase's earnings and a plunge in crude oil encouraged traders to sell the yen against a basket of higher yielding currencies. The swing point is in place, and the team's commentary from Tuesday and Wednesday have followed through and moved the pair off the 100 simple moving average, which was positioned at 104. Now to retrace the moves back towards the 200-day SMA at 107.50. It will need positive equity markets and oil to hold lower, and that is what we have right now. On the economic calendar for tomorrow, there's really a whole lot of nothing going on, and that is good. We can run on sentiment and momentum. In Asian equities today, trade desks were encouraged by Wednesday's U.S. rally, although they didn't show quite the level of enthusiasm that their U.S. counterparts did. China's gross domestic product expanded by the slowest pace since 2005 on slowing export growth as the U.S. economy cooled and the yuan appreciated. European traders followed the U.S. rally on Wednesday as stocks surged the most in 3 months after Nokia and JP Chase reported earnings that beat analysts' estimates, easing concern a slowing economy and credit losses will stifle profit growth. The Dow Jones Stock 600 gained 2.9% as indexes in all 18 Western European markets gained. On Wall Street today, a record gain for the Standard & Poor's Financial Index spurred by the Wells Fargo profit report led the major indexes to big gains on the day as traders ignored the CPI report, which showed inflation rose by the most since 1982. Overall, for the first time in quite a while, during the first half of the New York session, traders looked to be entering carry trade positions, meaning they were buying higher yielding currencies such as the euro and pound against the dollar while they sold the yen to buy the dollars. The likely reason was because financial companies such as JP Morgan, which is the largest U.S. bank by market value, Huntington Bank shares, BlackRock, and Comerica reported better than projected profits and helped extend a record rally for financial companies. Better than expected reports on U.S. housing and employment overcame a report from the Federal Reserve Bank of Philadelphia which said manufacturing contracted for the 8th month in a row. Crude oil for August delivery fell $5.42 or 4% to $129 a barrel. This is the first time in 6 weeks that it's dropped below $130. Gold futures for August delivery rose $8 or 0.8% to $970 an ounce on speculation a slowing U.S. economy and higher inflation will boost demand for the precious metal as a store of value.
All contents of the LFB are for informational purposes only and should not be used as a replacement for research by an individual investor, trader, or licensed investment professional. Neither the LFB nor any of its affiliates shall be liable for any errors, omissions, or for any actions taken in response to the information contained herein. We hereby make no representations or warranties regarding the accuracy of any information contained in this broadcast or on our site. Forex market trading involves special risks and may not be suitable for everyone. Each investor or trader should assess their financial situation and risk tolerance before proceeding. Copyright 2007, LFB Services, LLC. All rights reserved.